Did you know that millions of families could get bigger tax refunds under proposed changes to the child tax credit? It's an exciting prospect, isn't it? These changes are part of a bipartisan tax deal passed by the House recently. The revamped tax credit is designed with a focus on low-income families, particularly those with multiple children. In fact, over 95% of the new benefits for 2023 are targeted towards households with children earning up to $40,500. So why is this a big deal? Well, under the existing rules, these families often receive smaller credits, partly because they don't earn enough money or owe taxes. However, it's important to note that this expanded credit isn't a return of the special monthly child tax credit payments many families received during the pandemic. It's a different initiative altogether. But what exactly is the child tax credit and who qualifies for it under the current law? Let's delve deeper into that. Before we dive into the proposed changes, let's understand the existing child tax credit. This is a significant financial instrument for families across the country, designed to provide them with some relief in raising their children. At present, most families can benefit from a maximum child tax credit of $2,000 for each child under the age of 17 at year's end. However, it's important to note that income eligibility requirements apply to this credit. In fact, families earning less than $2,500 a year do not qualify for this benefit. Furthermore, eligibility for the full credit begins to phase out for households earning up to $200,000 for single filers and up to $400,000 for those married filing jointly. To claim this credit, families must file a 1040 tax return and attach Form 8812. The Internal Revenue Service provides several options for filing your return for free, including a direct file option for those with very simple returns. Of course, to qualify for the credit, children need to have a Social Security number and must be considered dependents. The Internal Revenue Service has long-standing rules that define who is a dependent, as described in IRS Publication 501. Now, how would these rules change under the proposed amendments? Under the new amendments, low and moderate income earners may see a significant increase in their child tax credit. These proposed changes could see eligible families receive up to $1,800 per child for 2023, even if they don't owe income taxes. This is a $200 increase from the current maximum of $1,600. Now, how do families claim this credit? The process is straightforward. Families claim the credit by filing a 1040 tax return and attaching Form 8812. If that sounds daunting, don't worry, there are options for filing your return for free. For example, the Internal Revenue Service offers a direct file option broadly open to those with straightforward returns in March. But what about the eligibility requirements? Are they changing too? The answer is no. The existing rules for who qualifies as a dependent remain in place. This means children must have a Social Security number to be eligible, and they must be considered dependents. So if you're a low or moderate income earner with children, these proposed changes could mean a bigger tax refund for you in 2023. It's definitely something to keep an eye on as the Senate reviews the proposed amendments. But remember, to qualify for the credit, children need to have a Social Security number, and they must be considered dependents. So, what are the key takeaways from these proposed changes to the child tax credit? Firstly, the revamped tax credit would primarily aid low-income families, especially those with multiple children. More than 95% of the new benefits for 2023 would go to households with children earning up to $40,500. Secondly, the expanded credit wouldn't be a return of the special monthly child tax credit payments many families received during the pandemic. Some higher-earning families might benefit in future years because of inflation adjustments to the existing tax credit. Thirdly, if passed by the Senate, these changes would apply to tax years 2023 through 2025. The child tax credit changes would cost $35.5 billion over the 3 years. Lastly, to claim the credit, you file a 1040 tax return and attach Form 8812. Stay informed as these changes could significantly impact your tax return, especially if you're a low or moderate income earner with children. We hope you found this video informative and helpful. Understanding the child tax credit system can be complex, but it's essential to be aware of how these changes can affect your finances. If you found this information valuable, please give this video a thumbs up and share it with your friends and family. You never know who else might benefit from this knowledge. Don't forget to subscribe to our channel for more videos like this one. We're constantly updating our content to bring you the latest and most relevant financial advice. Remember, staying informed is the first step towards financial stability. Thank you for watching.